Assalamualaikum warahmatullahi taala wabarakatuh. So now I will present about the sales and collecting cycle. Before we go any further about this sales and collecting cycle, first of all, we must know what is sales and collecting cycle. So the answer is the sales and collecting cycle is a series of business activities and related information processing activities that continue to provide goods and services to customer and collect cash as payment from the sales. The revenue cycle also is an income procedure starting from the part of selling credit authorization, taking goods, receiving goods, and billing up to cash received. Alright, after we just see at the first slide, which is what is sales and collecting cycle, we move on to the second, which is the objective of sales and collecting cycle. So now I will explain a bit about the objective of sales and collecting cycle, which is the main purpose of the sales and collecting cycles is to provide the right product in the right place and time at the right price. In order to achieve this goal, management must make several important decisions, including first, management must knowing how far the product can and must be tailored to each customer needs and desire. Second, management must control a lot of inventory that must be owned and the place for the inventory. So the third one, use the right way to deliver merchandise to customer. And for the fourth is determine the amount of credit that should be given to each customer. Next, determine the credit terms that should be given to customer. And the last one, determine how customer pay so that they can be proceed to maximize cash flow. Okay, so we move to the sales and collecting cycle activities. There are 6 processes of sales and collecting cycle activity. For the first one is receiving customer order. After receiving customer order, the second one is creating credit. So after creating credit, we go to the preparing sales order, and after we prepare the sales order, we move to the shipping goods, and then for the fifth, we go to billing customer, and after the billing customer, and the last of the sales and collecting cycle activity is we recording and collecting cash receipt from customer.
Assalamualaikum warahmatullahi wabarakatuh. So today we'll take a look at revenue cycle processes. Basically revenue cycle ni ada 6 steps, and saya akan terangkan 3 step awal, and lagi 3 steps selebihnya akan diterangkan oleh kawan saya. Alright, yang pertama, the first one is receiving customers' orders. The revenue cycle begins with the receipt of orders from customers. The sales department typically performs the sales order entry process. There are 3 steps in this process. First, taking customer's order, and then checking and approving customer credit. Lastly, checking inventory availability. Today, most organizations use sales order documents. This is usually an electronic form displayed on a computer monitor screen. The sales order contains information about item numbers, quantities, prices and other terms of the sale. So apa itu receiving customers order? Receiving customer order ni, apabila customer beli barang dekat kita, kita akan receive satu receipt of order daripada customer ni. And then sales department akan perform sales order entry process. Dalam sales order entry process ni ada 3 step pula. First kali, sales department ni akan ambil customer order tu, and then check and approving customer credit. Maksudnya check and approve lah customer punya credit ni layak ke tak layak. And then checking inventory availability, and dia akan check stok ada ke tak untuk customer beli barang tu. Alright, we will take a look at the second step, which is granting credit. So, what is granting credit? Careful monitoring of accounts receivable is very important because some customers will end up not paying off their accounts. A useful report for doing this is an account receivable aging report, which lists customer account balances by length of time outstanding. The information provided by such reports is useful for projecting the timing of future cash inflows related to sales, deciding whether to increase the limit for specific customers, and for estimating bad debts. In addition to checking a customer's credit, salespeople also need to determine whether sufficient inventory is available to fill the order, so that customer can be informed of the expected delivery date. If there is not sufficient inventory on hand to fill the order, a back order for those items must be created. Once the inventory availability has been determined, the system then generates a picking ticket that lists the items and quantities of each item that the customer order. The picking ticket authorizes the inventory control function to release merchandise to the shipping department. Picking tickets today are often electronic forms that may be displayed on portable handheld devices or on monitors built into forklift. Alright, now we take a look at preparing sales order for the third one. The third basic activity in the revenue cycles is filling customer orders. The first step in filling a customer order involves removing the correct items from inventory and packaging them for delivery. And then the picking ticket generated by the sales order entry process triggers the pick and pack process. Warehouse workers use the picking ticket to identify which products and the quantity of each product to remove from inventory. When the quantity was recorded, the inventory transferred to the shipping department. The inventory master file also produces a packing slip and multiple copies of the bill of lading. The packing slip lists the quantity and description of each item included in the shipment. The bill of lading is a legal contract that defines responsibility for the goods in transit. It identifies the carrier, source, destination, and any special shipping instructions. A copy of the bill of lading and the packing slip accompany the shipment.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Syafiq bin Azizan. I'm from TM Tapah and I'm in SC110 Diploma in Accountancy, and right now I'm in semester 5, my last semester, and my class for this sem is SC110 class 50. So I'm going to explain to you about the revenue cycle in shipping goods. So the first point is removing the correct item and packed item for delivery, and the warehouse workers will identify which product that they are going to be sent using the inventory ticket, and the inventory that have been packed will be transferred to shipping good, And the problem that we are going to face when there is a wrong item or quantity in the product, that there will be thief or of inventory, which can be or either outsider can be either outsiders or employee, and it will make inventory records inaccurate and lead to feelings customer order and problems. Yang dimaksudkan di sini apabila telah mendapat pesanan daripada pelanggan mengenai barang yang telah mereka pesan, maka pekerja di warehouse tersebut akan mengenal pasti barang dan kuantiti produk yang telah dipesan, dan akan ditransfer, akan diletakkan di bahagian shipping department. Kemudian masalah yang akan dihadapi sekiranya terdapat kekurangan barang yang dipesan ataupun kesalahan jenis barang yang dipesan adalah mungkin akan ada pencuri yang akan mencuri barang tersebut. Mungkin juga pencuri datang daripada orang luar yang di mana bukan daripada company atau pekerja itu sendiri. Boleh juga jadi pekerja itu sendiri yang mencuri barang tersebut. Dan seterusnya, apabila ada masalah pencurian di situ, rekod inventory akan menjadi tidak seimbang dan menyebabkan berlaku kesalahan di dalam mengisi customer order punya borang lah. Dan info tambahan di sini adalah inventory master produce a packing slip, multiply copies of bill landing. Packing slip is a list of quantity and description of item include the shipment. For bill landing, the definition is the legal contact that the responsibility for the goods in transit and identify carrier, source, destination and any special shipping. The copy of bill landing and packing slip will be in the shipment, so that customer need to pay the freight charge. So the copy of bill landing serve the charge to make the customer pay the amount of it. So di sini ketua yang akan handle inventory tersebut akan memproduce lah slip mengenai pembungkusan barang tersebut dalam banyak kopi, supaya bila mana berlaku sebarang kecurian dapat kita rujuk pada kopi yang pada salinan yang kita buat. Dan kopi ini dan packing slip dan juga bill landing ni akan dikenakan charge bayaran, iaitu untuk pengangkutan barang tersebut. Seterusnya kita akan bergerak ke slide yang kedua. Okay, right now we are going for the second slide. The second slide is about the billing customer. The first one is about the invoicing and update the account receivables. So what is invoice? Invoice is the information processing activity that repackage and summarize information from sales, order entry and shipping activities. So sale invoice is a basic document in billing, and the function of the invoice is to notify the customer about the amount to be paid and where to send the payment that they're going to pay. The problem that the problems that caused by can be caused because of the invoice is the failure to bill customer, and that will be result in loss of asset and erroneous data about sales and inventory, also account receivable. To reduce the risk, we need to segregating shipping and billing function. There is also billing error like overbilling that will make the customer be dissatisfaction under billing results in loss of asset, and pricing mistake be solved by having a system retrieve appropriate data and by restating ability of employees. So dekat sini kita ceritakan mengenai billing customer, iaitu invoice dan juga account receivables. Dan ni basic lah dalam belajar account sendiri untuk faham mengenai invoice dan juga account receivable, dan masalah yang akan dihadapi apabila berlakunya masalah dari segi invoice tersebut adalah sukar untuk kita mendapat pelanggan kembali, dan juga kita akan dapat kesalahan ataupun kehilangan aset disebabkan oleh salahnya rekod di dalam invoice tersebut. Dan juga untuk kita mengurangkan risiko, kita perlu mengasingkan di mana fungsi ataupun dokumen penghantaran dan juga account receivable itu sendiri, supaya bila mana kita nak kira ataupun kita nak cek balik, kita tak perlu nak cek dalam satu dokumen yang sama, dia berada dalam dokumen yang asing. Jadi kita boleh cek satu persatu tanpa perlu pening kepala lah. Dan juga dalam account receivables ada juga masalah seperti pelanggan tak puas hati ataupun pekerja sendiri yang silap maklumat lah dari segi apabila pelanggan telah membayar akaun tersebut, membayar hutang tersebut, tetapi pekerja tidak merekodkan. Jadi company tersebut perlu bertindak tegas dengan para pekerja supaya kurangnya masalah yang akan berlaku apabila para pelanggan telah merekodkan ataupun telah membayar bayaran hutang mereka. Seterusnya kita akan bergerak ke slide yang ketiga untuk bahagian saya. Alhamdulillah, kita akan bergerak ke poin terakhir di bahagian saya, iaitu collect dan proses customer payment, iaitu kita akan mengutip dan kita akan memproses maklumat mengenai pembayaran pelanggan. Jadi masalah yang akan dihadapi adalah the problems that we are going to face, that it can be stolen easily. So it's important to appropriate measure to reduce the risk of theft, and dia lebih mudah untuk dicuri, dan juga penting untuk kita membuat perkiraan yang betul supaya dapat mengurangkan risiko kecurian. Dan account receivable should not have physical access to cash or checks. Maksudnya akaun penghutang tidak boleh mempunyai dalam bentuk fizikal, seperti cash ataupun cek, supaya bila mana adanya dalam bentuk fizikal ini dan orang yang akan menerima cash ataupun cek tersebut, boleh berlaku kecurian, boleh berlaku pecah amanah kepada dia. Sebab hutang bukanlah sebab dalam bentuk wang ni, kita cakap dalam bentuk wang ringgit, dalam bentuk fizikal ni, dia bila sampai kepada kita, kita akan jadi sanksi. Kita akan macam ambil je lah, bukan ada orang tahu pun kan, aku ambil sikit je, macam tu lah lebih kurang. Jadi kita tidak boleh ada dalam bentuk fizikal, dalam bahasa Inggeris physical access tentang account receivables. Dan cara, the method method to identify source of remittance is by mailing the customer 2 copies of invoice, dengan menghantarkan kepada customer dalam bentuk email 2 kopi invoice yang mereka telah order ataupun telah pesan terhadap barang mereka lah. Jadi syarikat akan membuat invoice dan menghantar kepada pelanggan 2 salinan invoice tersebut, dan meminta request one to be returned with payment. Maksudnya kita akan minta kepada pelanggan supaya menghantar salah satu daripada invoice tersebut bersertakan dengan bayaran barang yang telah mereka pesan, dan it will be routed to account receivable, and the actual customer payment will be sent to the cashier. And apabila pelanggan telah menghantar bayaran wang mereka yang disertakan dengan invoice, dia akan akan dimasukkan dalam maklumat akaun penghutang mereka lah, supaya dapat kita tulis kat situ bahawa hutang telah lansai dan bayaran yang telah dihantar akan dihantarkan kepada juru wang. Cara lain Untuk ada option to have mail rooms personal is to prepare a remittance list. So remittance list is a document to identify the names and amount of all customer remittance and send to account receivables. So cara lain untuk kita membuat mail room selain daripada emails adalah pihak syarikat sendiri perlu membuat satu senarai pengiriman wang ataupun senarai kiriman wang daripada pelanggan supaya senarai kiriman wang ini adalah salah satu dokumen untuk kita mengenal pasti nama dan jumlah yang telah dihantar oleh para pelanggan kepada syarikat untuk kita letakkan di dalam akaun penghutang supaya pelanggan tidak perlu lagi membayar. Dengan adanya dokumen seperti ini, masalah dari segi kecelaruan ataupun masalah dari ketidakseimbangan dalam akaun tersebut dapat diselesaikan dengan mudah. InsyaAllah itu sahaja daripada saya. Terima kasih.
Next, after we see the sales and collecting cycles activity process, I will go to the account that involve in sales and collecting cycle. So, there are a few accounts that involve in sales and collecting cycles. Like for the first one, we have cash sales account, second credit sales account, third account receivable, and the fourth is bank account, and the fifth we have cash discount account, and the last one sales return account. So cash sales account and credit sales account will use when the customer buy something in cash or in credit. For account receivable and bank account, it will use to simplify the process of sales. So the next one, cash discount account, used and given to the customer to encourage them to buy in bulk. And the last one, which is sales return account, used to record the activity of receiving goods returned by the customer due to damages or the goods do not fit the customer pre-order.
These are the sales and collection cycle activity. Number 1, receiving customer order, granting credit, preparing sales order, shipping goods, billing customer, and the last one is recording and collecting cash receipt. Number 1, receiving customer order. Receiving customer order can be defined as customer can make an order through the counter via the telephone and online. Hence, the order are processed electronically or in written form, such as customer order form. As you guys can see, this is an example of customer order form which consists of order info, customer info, and payment information. The customer will fill in some information regarding their order to ensure there is no confusion between both entities. The objective of customer order form is to get the correct order to customer by the promised due date at the lowest possible cost and to ensure the occurrence of sales transaction. Number 2 is granting credit. The company will proceed a credit review process to ensure that the business does not grant a credit to customer who are unable to pay. The credit department will handle all the credit reviews. Usually, the company will prepare a signed sales order form, which the objective is to give appropriate credit limit to the customer based on the credit evaluation for a new customer. And for existing customer, the financial statement for current and past will be compared to determine if the customer has a sufficient credit balance to make a credit when buying the product. Usually, the company will prepare a signed sales order form, which the objective is to give appropriate credit limit to the customer based on the credit evaluation for a new customer. And for existing customer, the financial statement for current and past will be compared to determine if the customer has a sufficient credit balance to make a credit when buying the product.
Next, prepare and record sales order. Upon receiving the purchase order from the customer, the sales clerk immediately creates the sales order. There are three main objectives of preparing sales order. Number 1, management of order and inventory. To determine whether the product purchased from the customer is still available in store or not, they need to check the order and the inventory are still available for purchase. If the certain product is temporarily out of stock, the seller needs to do and show how many back order in the sales order. Back order meaning that the product is temporarily out of stock. Number 2, for sales or billing department referred in order to generate an invoice. Error in pricing and quantity will lead to accounting errors. And number 3, for auditing purpose. When auditing the financial statement of the company, the auditor inquires about the sales order document to review about the sale of the business. As you can see, the sales order consists of name of the product, price of the product, terms and quantity, delivery date, billing address, and shipping address. On your right side, there is an example of sales order prepared by the sales department.
This is the example of invoices. Move to the next one, cycle activities, which is shipping goods. A shipping document is the shipment document that specifies the amount and value of the item ordered. It could be used to make an invoice to the client. To ensure that certain shipments are registered and invoiced, it is important to resolve the statement of clarify as well as the consistency of the amount invoiced. Next one is billing customer. First of all, what is billing customer? Billing defines it as the method of producing invoices for the consumer on a periodic or one-time basis, based on the type of pricing arrangement selected by the consumer. The billing method entails multiple steps defining commodity codes, setting up consumer types, setting up billing processes, and establishing billing periods. Bills generally contain the following components. First, billing date. Second is customer name and address. Third is item and deliverables. Fourth, unit price and discount, if any. Fifth, total amount. Sixth, tax component. Seventh, grand total. And the last one is signatures and bank details if required. The bill of lading is one of example of shipment document. It is a paper needed to transport a freight shipment, and a receipt of freight supplies a contract between the freight carrier and the shipper and a document of naming. The bill of lading is a legally binding contract supplying the driver and the courier with all the information required to process and properly invoice the shipment of merchandise. There's a lot of purposes of billing customers, such as bookkeeping, tax records, and tracking inventory. Bookkeeping is invoices track all the transactions, so they are useful for accounting purposes. Invoices provide you with the financial history of your company. They track all the money that comes into your company from sales and will help you calculate your income and cash flows. Second is tax records. Your revenue invoices include evidence that serves to validate the details you list on your tax filings last year. Both small business owners should maintain a database of their business activities, including invoices on a regular basis. The last one is tracking inventory. If your company holds inventory, sales invoices will help you track how much inventory you have and estimate how much you will need in the future based on previous sales. Daily Sales Summary. The daily sales report is a management method used by companies, sales representatives, and supervisors to obtain valuable day-to-day sales information on the amount of closing transaction, consumer interaction, and opening, as well as many other sales related to KPI. This is one of the examples of daily sales report. Sales Journal Transaction. The sales journal is a special journal being used to document all credit sales. In essence, any trade entered in the sales journal resulted in a debit to the accounts receivable and a credit to the sales account. Both cash transactions are reported in another separate newspaper known as the Cash Receipt Journal. What is credit note? A credit note is also known as a credit memo, which is short for credit memorandum. This is a commercial document that the supplier produces for the customer to notify the customer that a credit is being applied to the customer for various reasons. The reason is, first is the customer returned the goods or rejected the services for any number of reasons. Second, the goods were damaged in some way, usually during transit. Third, if there was a mistake in the price on the original invoice. And the last one is the customer overpaid the original invoice. Sales return and allowance. It is a contra revenue account deducted from sales. It is a sales adjustment account that represents merchandise returned from customer and deduction to the original selling price when the customer accepts defective products. This is an example of journal of sales return and allowance.
Account receivable subsidiary ledger show the transaction and payment history of each customer to whom the business extends credit, meaning that the business is doing credit sales with the customer. The balance in each customer account is periodically reconciled with the account receivable balance in general ledger to ensure accuracy. So, the account involved in this ledger is customer account and account receivable. Next, record and collect cash receipt. Cash receipt is a printed document show the amount of cash receipt whether from the customer, bank or investor. Usually, the cash receipt from the customer is at the time of sale transaction occur. So, why we should record and collect cash receipt? So, let me tell you the answer. Number 1, for evidence for the payment obtained from the customer. When preparing the accounting record, cash receipt is needed as support of existing recorded transaction. Number 2, proof of ownership of the product. After receive the product, the buyer will get the ownership of the product. And number 3, for auditing purpose, cash receipt is important to avoid the risk of audit issue. The auditor need the cash receipt as a document or proof to make sure the record in accounting book is free from material misstatement. Next, the important information should have in cash receipt is date of transaction, amount of cash receipt, name of the payer, a unit number to identify document. This unit number is set by the seller or by the company. Next, payment method, whether from cash or check, and lastly, signature of the receiver.
Daily cash count sheet is defined as a daily reconciliation of cash receipt and cash payout. If there is a lot of business that transacted in cash, such as in a retail store, The business should prepare a cash sheet at the end of each day. Next is deposit slip. It means a small paper form that a bank customer will include when depositing funds into a bank account. It consists of the date, the name of depositor, the depositor's account number, and the amount of being deposited. Daily cash count sheet is defined as a daily reconciliation of cash receipt and cash payout. If there is a lot of business that transacted in cash, such as in a retail store, the business should prepare a cash sheet at the end of each day. Cash receipt journal are able to manage all the cash inflows of a business organization. In other words, this journal is used to record all the cash coming into the business. Bank reconciliation statement can be defined as a document that compares the cash balance on a company balance sheet to the corresponding amount on its bank statement. In other words, reconciling the two accounts helps to identify whether accounting changes are needed. Bank reconciliations are completed at regular intervals to ensure that the company's cash records are correct. Besides, they also help to detect fraud and any cash manipulations.
Is internal control. Internal control is the process designed and effected by those charged with governance, management, and other personnel to provide reasonable assurance about the achievement of the entity. Objective concerning the reliability of financial reporting, effectiveness, and efficiency of operations, and compliance with applicable laws and regulations. Is internal control. Internal control is management and auditor's responsibility. Management concerns about internal control. Internal control provide a way for management to meet its agency responsibilities. Internal control system ensure that the information generated for decision-making purpose are reliable. Effective internal control can ensure that assets are safeguarded from unauthorized use. Financial records are reliable to permit the preparation of financial information. Auditors' concerns about internal control. Auditors needs to understand the internal control system of an entity in planning the audit. If the internal control system is strong, the financial statement and other data generated by the entity more reliable, and thus the auditor could possibly reduce substantive tasks. However, if the internal control is weak, the auditor need to perform more substantive tests and detailed checking during the audit. Auditors' concerns about internal control. Who's responsible to maintain the internal control system? The answer is auditor. The auditor will evaluate and ascertain the internal control system in deciding the level of testing required. A good internal control system will reduce the amount of audit work required. And it also responsible to understand internal control system. Who's responsible? The objective of internal control, which is occurrence, valid, authorized, completeness, recorded, accuracy, valued, included and summarized, cut off, proper time, classification and properly classify. And now we move on to internal control structure. It consists control environment, risk assessment, the information system, control activities or procedures, and monitoring. And now we move. The first point is control environment. It sets the tone of an organization that influences the control consciousness of its people. It is the foundation for all other components of internal control, providing discipline and structure. Numerous factors compromise the control environment in an entity. among which are the following: integrity and ethical values, commitment to competence, board of director and audit commit, management philosophy and operating style, organizational structure, assignment of authority and responsibility, and also human resource policy and practice. The second point is risk assessment. Risk assessment for financial reporting purpose in an entity's identification, analysis, and management of risk relevant to the preparation of financial statements that are fairly presented in conformity with generally accepted accounting principles. Management risk assessment should include special consideration of the risk that can arise from change in circumstance, such as new areas of business or transactions, changes in accounting standard, new law or regulation, rapid growth of the entity, and changes in personnel involved in the information processing and reporting function. The next point is the information system. The information system relevant to financial reporting objective, which include the accounting system, consists of the methods and record established to identify, assemble, analyze, classify, record, and report entity transaction, and to maintain accountability for the related asset and liabilities. Communication involves providing a clear understanding of individual roles and responsibility about the internal control structure over financial reporting. The next point: control activities or procedures. Control activity are those policy and procedures that help ensure that management directives are carried out. They help ensure that necessary action are taken to address risks to the achievement of the entity objective. Control activities have various objectives and are applied at various organizational and functional levels. Control activities relevant to a financial statement audit may be categorized in many different ways. One way is as follows, which is information processing controls, general controls, application controls, proper authorization, documents and records, independent checks, segregation of duties, physical controls, and performance reviews. And now is monitoring. Monitoring is the process that assesses the quality of the internal control structure's performance over time. It involves assessment by appropriate personnel of the design and operation of controls on a suitably timely basis to determine that the internal control system is operating as intended and that it is modified as appropriate for changes in conditions. Next, we move on to limitation of internal control. No matter how well internal controls are designed, they can only provide reasonable assurance that objectives have been achieved. Some limitations are inherent in all internal control systems. These include judgment, which is the effectiveness of control will be limited by decision made with the human judgment under pressure to conduct business based on the information at hand. For the second point is breakdown. Even well-designed internal control can break down. Employees sometimes misunderstand instruction or simply make mistakes. Error may also result from new technology and the complexity of computerized information system. Management override. High-level personnel may be able to override prescribed policy and procedure for personal gain or advantage. This should not be confused with management intervention, which represent management action to depart from
prescribe policy and procedures for legitimate purpose. Collusion. Control system can be circumvented by employee collusion. Individuals acting collectively can alter financial data or other management information in a manner that cannot be identified by control system. For cost versus benefits, the costa of an entity's internal control structure may exceed the benefit that are expected to be ensured. Lastly, unusual transaction. A limitation of internal control is that they are generally designed to deal with what normally or routinely happen in a business. However, it may be the case that an unusual transaction may occur which does not fit into the normal routines, in which case standard control may not be relevant to the unusual transaction. Hence, mistake may be made about that unusual transaction. The advantages of internal control, which is helps to protect the asset of the business from misuse, theft, accident, and others. It also helps to implement management policies to attain corporate goals, help the auditors in his or her work detecting all the errors and fraud which are committed in the books of accounts. It also helps to increase the accuracy and reliability of financial statement and book of accounts. Helps to regulate the work of staff through a division of work among the staff in a scientific manner, which help to make the daily work of staff effectively. It also helps the management to prepare and implement effective plans by providing correct and factual information, and also helps to put a moral pressure on staff itself. The letter of management, letter by auditor to management at the end of his audit work, listing any weakness in the design or operation of the internal control system which may have come to his attention, explaining the significance and the effect on current and future financial statement, and make suggestion as the way this weakness can be removed or reduced.
Develop the audit plan is process of developing audit plan for sales and receivable, involve performing risk assessment procedures by understanding the entity and internal control over sales and receivable. Based on information obtained, the risk of material misstatement are assessed and further audit procedures are designed. Understanding the entity to identify inherent risks or existed risks. It helps to determine potential misstatement in financial report. In sale and receivable, auditors should understand the nature of the entity business in terms of type of product and services, target market and customer, and prices, return, discounts, credit sale, and payment policies. In addition, it helps in assess inherent risks relating to assertion for receivables and sales. Inherent risks derive from business risks such as a decrease in sales due to economic declines, doubtful debt due to inability to collect receivable, and overstatement or understatement of sales due to improper sales recognition. In the event that fraud risk is identified, the auditor should make sure that control over sales and receivables are established and implemented adequately and effectively. The design of audit plan should reflect its response to a fraud risk, such as performing further audit procedures. obtaining an understanding of internal control over sales and receivable. Auditor should understand control over sales receivable by preparing a written description or flowchart. Auditor may complete internal control questionnaires for sales and receivable. Then, auditor may determine if the internal control over sales and receivable are implemented appropriately and effectively. For example, the separation duties between cash handling and customer ledger maintenance can be observed by the auditor. Component of internal control. It consists of 8 components, which is number 1, control environment. The auditor should obtain an understanding of the client control environment. Along with obtaining this information, the auditor shall evaluate whether management has created and maintained a culture of honesty and ethical conduct, and the strengths in the control environment elements collectively provide the appropriate basis for the other components of internal control, and whether those other components are not undermined through deficiency in the control environment. Number 2, monitoring of control. The auditor should obtain an understanding of the significant activities that the company used to display the effectiveness of its internal control over financial reporting, and how the organization initiate corrective action related to its control. Number 3, performing walkthroughs. The auditor may carry out walkthrough as part of obtaining information of internal control over financial reporting. In order to perform a walkthrough, the auditor follows a transaction from origination through the company's process. Walkthrough procedure include a combination of inquiry, observation, and inspection of relevant documentation and re-performance of control. Number 4, performing analytical procedures. The auditor should perform analytical procedures that are designed to enhance the auditor's understanding of the client business and the significant transactions and events that have occurred since the prior year end, and become aware of areas that could constitute specific risks relevant to the audit. Number 5, identifying and assessing risk of material misstatement. Risk of material misstatement at the financial statement level and assertion level should be determined by the auditor. In identifying and assessing risk of material misstatement, the auditor should discover risk of misstatement using information obtained from performing risk assessment procedures, and decide whether any of the identified risks of material misstatement are significant risks. Number 6, factor relevance to identifying fraud risk. The auditor must evaluate whether the information obtained from the risk assessment procedures indicate that one or more risk factors are present and should be considered in identifying and assessing fraud risk. Number 7, further consideration of control. When the auditor has decided that a significant risk, including a fraud risk, exists, the auditor should evaluate the design of the company's control that are meant to address fraud risks and other significant risks, and decide whether those controls were properly implemented. Number 8, when the auditor obtains audit evidence during the course of the audit that may challenge the audit evidence on which the auditor originally based his or her risk assessment, the auditor must revise the risk evaluation and modified audit approach in response to the revised risk assessment. Assessing risk of material misstatement. Based on information obtained from understanding an entity, inherent risk and internal control, the auditor assesses risk of material misstatement. For example, the auditor may determine whether the sales are exposed to risk of overstatement due to pressure to report high profits. Auditor should assess if control over sale cut-off are effective to ensure sales are recorded in proper period. Once risks of material misstatement are determined, the auditor should design further audit procedures. Designing further audit procedures. Further audit procedures consist of tests of control and substantive procedures. Auditor should determine the test to be performed based on the assessed risk levels. Tests of control provide evidence about the effectiveness of the operation of a control in preventing or detecting material misstatement in a financial statement. For example, the auditor should include tests of control if they have not obtained sufficient evidence to determine whether the internal control system in place are functioning effectively to reduce the risk of material misstatement in sales and receivable records. If they believe that control risks are high, a higher level of substantive procedure should be performed to obtain a required audit evidence.
In the audit cycle, we are going to talk about performing further audit procedures. Audit procedures are divided into two types, which is test of controls and substantive procedures. So here we are going to talk about the definition of test of controls. Test of controls is the process of evaluating an audit strategy for sales and receivables, includes carrying out risk management exercise by understanding the entity and internal monitoring over sales and receivables. Based on the information collected, the chance of material misstatement are measured and further audit protocols are established. Tests of the measure should be carried out prior to substantive tests. However, in the event that revenue and receivables regulation are not well applied or inadequate, the substantive process should be followed until the auditor obtains an appreciation of the internal control. Certain monitoring checks are carried out during the comprehensive of internal controls. Testing control are intended to provide ample information to assess if revenue and receivables controls are working successfully. For example, vouching and tracing techniques are used to test sales and receivables control efficiently to guarantee the occurrence and completeness of sales and receivables transactions. Testing of controls requires testing of designs, efficacy, and operational effectiveness. Okay, next. Tests of controls are divided into two types, which is test of design effectiveness and test of operating effectiveness. First, test of design effectiveness. The auditor uses the client-specific knowledge of information systems and internal control systems to assess the extent of critical controls on revenue and receivables. The auditors have to consider the role of sales period to identify the appropriate controls and possible errors. Once the auditor recognizes the existence and absence of the appropriate controls, the auditor shall make a tentative evaluation of the control risk. For the second one is test of operating effectiveness. The auditor shall carry out a measure of the operational efficacy of the controls, which includes a number of procedures. The auditor may, for example, conduct observation, performance, and record inspection, which is vouching and tracing. The auditor can obtain substantive proof at the same time as concluding the procedures to assess the operational efficacy of the control refers to as dual-purpose test. However, the auditor shall draw the conclusions with caution because the control measure only calculates the amount of error and not the size of the errors. The scale of the error is determined by the substantive assessment, which are known to be important because they are material. For example, in the case that misstatements are found in the sales transactions, the auditor may assume that sales controls are not working effectively. Okay, for this page, we will talk about the control risk assessment. What is the function and what is the potential misstatements? First, customer's order. The potential misstatements for the customer's order is sales are made to the unlawful consumers. Second, credit approval. Credit transactions are provided to consumers with low credit ratings. Next, issuing goods. Goods are issued to an approved order, and quantity and products given are separate from sales order. Besides that, invoicing customer. The potential misstatement is fictitious sales shall be recorded. Invoices are not recorded, and invoices are submitted on the incorrect customer's account. Next, collection of cash sales and receivables. The cash transactions and receipts are not properly recorded. Receipts has been sent to the incorrect customer's account, and cash may not be deposited daily. And the last function is adjustment to sales and receivables. Unauthorized changes are made to revenue and receivables. To avoid the potential misstatements from being happen, we have to follow some control procedures. First, customer's order. The control procedures is the list of eligible customers is checked and revised, and each order for sales shall be approved. Second one is credit approval. Credit checks are made on all prospective customers. Credit limit shall be reviewed prior to acceptance of credit sales. Okay, for the next one is issuing goods. All goods are issued shall be reviewed by qualified staff against approved sales orders in terms of amount and forms of goods. Pre-number bill of lading shall be prepared for each shipment. Okay, next, control procedure for invoicing customers. All sale invoices are enclosed with related bills of lading and authorized sales order. Total invoice shall be reviewed against total revenue account. Periodic accounting of sales invoice and monthly statement is written and submitted to the client. For the collection of cash sales and receivables, we can using cash sales registers or point of sales, independent checks on sums of contract, and cash description of a daily basis, and also periodical preparation of bank reconciliation. And for the last one is adjustment to sales and receivables. All change shall be followed by the applicable and necessary documentation. Here is some explanation of test of controls. The operational effectiveness evaluation shall be carried out in order to acquire adequate proof of each claim, such as the nature, event, completeness, precision, cut-off, and description of sales and receivables transactions and balance. In addition, electronic information system controls are checked using computer assist audit techniques, CAATS. Two types of controls for the computer information system, such as general controls and application controls, have been defined in the auditing standard. General control refers to the entire aspect of the electronic information system. The auditors then review the general control of the company as a whole. Software controls are the controls related to the handling of sales and receivable transactions. They are assessed by auditors using one of three available approaches, which is data method testing, concurrent simulation, and integrated audit module approach. Control of systems are likely to be efficient only if general controls are effective. Next, the test of controls carry out the fact gathered and the conclusion drawn should be recorded in the working paper of the audit. As part of the audit documentation, the control monitoring audit software is prepared to instruct auditors in the performance of the organizational effectiveness test. The auditors shall make their final determination on the basis of information collected from the testing of sales and receivables monitors. Assessment of the extent of control vulnerability shall be calculated and reported, as they become the basis of the auditors to prepare the level of substantive procedures to be followed. When the degree of control risk is high, the number of substantive procedures to be carried out is also high. Okay, for this page, I will show the example of partial audit program for the test of control over credit sales. Like we can see, the date and the name of person who are prepare and review this transaction are very important. And next, client names and accounting period must also be put at the top of this table of transaction. After that, we can start to provide the detail of the test of controls. There are four main key points that we have to remember in the test of control, which is existence, completeness, accuracy, and cut-off. Okay, first under existence, perform observation procedures. As example, segregation of duties within the sales function, approving sales order, and approving credit. They also point under this existence, perform document inspection procedures. As example, select sample of sales transaction from sales journals, verify transaction dates, customer names and amounts, vouch to sales invoice bills of lading, and approve sales orders. Next key point is completeness. It is perform document inspection procedures. As example, review the use of pre-number sales order, bills of lading, and sales invoice. Scan the sequence number of sales invoice in the sales journals and trace a sample of approved sales orders to bill of lading, sales invoice, and sales journals. For the third key point is accuracy. Perform document inspection procedures. As example, examine evidence of proper credit approval, interdependent check on quantity and price. Besides that, examine evidence of an independent check on the agreement of totals for sales journal entries and amounts posted to customers' accounts. For the last key point, which is cut-off, perform cut-off test. For example, obtains the number of the last bill of lading for the final shipment of the year. Select sample of the bill of lading before the last number and agree with sales invoice date to ensure sales are recognized in current year. And also check on the agreement with entries in the sales journals to ensure they are recorded in current year. So, by using all this detail, the auditor may perform tests of control regarding credit sales transactions.
First of all, for introduction, I will divide it into 3 points. And first, the audit program
for substantive procedures is prepared based on preliminary assessment of control risk, which means the nature, timing or extent of the procedures will be based on the results from the test of controls and the level of detection risk. The second one, the auditor may use professional judgment to determine how detailed substantive procedures are. For example, when inherent risks are low, it is appropriate for the auditor to set a moderate level of detection risk to achieve the required audit risk. The level of detection risk influence the amount of procedures undertaken by the auditor to ensure the existence and occurrence of sales transactions. And normally the auditor will perform more than minimum level of testing. Okay, next we will talk about designing substantive procedures. Okay, in this section we will discuss about the substantive procedures for receivables and the related allowance. Okay, so efficient substantive mechanism tend to reduce the probability of discovery, as the chance of content misrepresentation being undetected in individual statements is minimal. And there are three types of substantive procedures. First, analytical procedures, test of details of transactions, and test of detailed balances. So before we perform the above procedures, the auditors should perform initial procedures such as tracing the opening balance for the current period to the audited balance of previous year's working papers, or obtain a listing of all customer balances and reconcile the amount to the ledger, and obtain the age trial balance of an account's receivables. Only then the auditor should perform the following procedures on the listing of customer balances: the calculation and compare a sample of customer details and balances between the listing and the subsidiary ledger. So we will go through the three substantive procedures, and first of all we'll go through analytical procedures. So analytical procedures are used to confirm expectations and perform in three stages. The first stage will be to evaluate an entity's perception of whether any adjustments in the balance of revenue and receivables can be anticipated. The second one, evaluating the fluctuations in the balance between revenue and receivables between the present year and the preceding year. And the last one is to determine ratios and trends for gross profit and average collection period. Okay, so the second substantive procedures is test of details of transactions. So this test will be performed during an interim audit and in the form of dual purpose tests. For example, the cut-off test performed on sales is one of the tests of details transactions. This test is to verify the account balance of sales at the end of the reporting period. In the test of detail of transactions, there is document inspection. There are three document inspections, and first is vouching. So auditors vouch for account receivables reported on supporting records in order to gain sufficient audit data on the nature, role and duties and accuracy of revenue and receivables. The chosen sample of debits in consumer account is vouched for sales invoices. And in order to ensure the completeness of accounts receivables and to ensure that the deduction on account receivable is duly rendered and valid, the chosen sample of credits is often vouched for remittance guidance and revenue change authorizations. And the next one, sales cut-off test. So this test will be performed to ensure that revenues and receivables for the next year are reported in the current year, and the adjustments in sales and receivables for the next year are expressed in the accounts of inventories and sales costs for the same year. And it is also to ensure that the revenue returns are recorded in the required time, and to prevent sales and receivables being overestimated. And the last one, cash receipt cut-off test. So this test is designed to prove if cash receipts are registered in a reasonable period of time. So before the last amount of the final receipts for the financial year, chosen cash receipt will be reviewed in terms of date and tracked back to the receipt journals. In order to ensure that the cash receipts are correctly registered, the auditors also review a regular cash report and certified cash slips before the year end. The last substantive procedures is test of details of balances. So this test will be focusing on obtaining evidence about account receivable balances, and it is not concerned about a debit or credit transactions, but the balance at the end of period and focus on adequacy of the allowances for doubtful debts. Confirmation of balances is under test of details of balance. So to validate the balance outstanding and payable by the companies, there will be a written confirmation sent to individual customers, and it is considered that answers to confirmation requests are extremely credible when they come from third parties. Evidence of nature and rights or value of the receivables of the account is given in the confirmation. Despite that, it does not have proof of completeness. So that is why it is only used when the amounts are material, and it is highly likely that the debtors will respond to the confirmation based on the previous experience on that engagement. The auditors may use alternative audit procedures when there is no reasonable assurance that the customers will respond and it is not effective to obtain sufficient procedures. And in the situations where clients do not allow auditors to have access to their debtors, the breadth of the audit can be treated as a restriction. There are two forms of confirmation. First is positive confirmation. It requires debtors to confirm whether the balance shown is correct or incorrect, and it will be used when the detection risk is low. So generally, it produces statistically valid evidence. And the second one is there are two forms of confirmation. First is positive confirmation. It requires debtors to confirm whether the balance shown is correct or incorrect, and it will be used when the detection risk is low. So generally, it produces statistically valid evidence. And the second one is negative confirmation, which require debtors to respond only when the amount stated in the confirmation is incorrect. It will only be used when the detection risk is moderate and high, so it does not produce statistically valid evidence. And not to forget, the auditor must ensure that appropriate controls are in place when using a confirmation request, such as getting a complete and accurate list of debtors, ascertaining that the amount, name and address are accurate when preparing the confirmation, ensuring that the confirmation are sent to debtors and to the auditor's office, properly list the selected debtors for confirmation and the results obtained in the audit working papers, and investigate all exceptions resulting from debtors' confirmation. The second procedure for test of details balances is alternative procedures. First one is to examine subsequent collections, which means the strongest justification for the presence and collectability of the debtors balance is the collection of payment from consumers. For the overdue invoices and the remaining amount, the remittance guidance that follows the cash receipt should be balanced. And the second one, vouch unpaid invoices and supporting documents constituting debtors balances. The outstanding invoices can be tracked to the client's signed lading bill and also to the order of the consumer to determine the amount of debtor. The working papers of the auditor should outline the process and results collected from the procedures conducted to validate the receivables of the account. The auditor should decide whether the proof gathered from the received confirmation, the alternative procedures, and the analytical procedures are adequate to ascertain whether the statements relating to the receivables of the accounts are substantiated. The next one is procedures to ascertain adequacy of the allowance for bad debts. So there will be two methods to determine the allowance for bad debts. First one is general allowance. In this method, the percentage will be used for calculating the amount. So in order to measure the allowance, the ratio of delinquent accounts or the percentage of revenue are used. Thus, in calculating the penalty, the auditor should verify the reasonableness of the percentage used, the internal control processes, and ensure that the procedures defined have been duly followed to derive the amount of the bad debt allowance. And the second one is specific allowance. So the auditor may obtain an independent review or information specific to the debtors to ensure the reasonableness of bad debt estimate. The last one, disclosure. So the auditor should know the disclosure requirements of the account receivable disclosure. Thus, the auditor should perform the following procedures. First one is review the list of account receivables and determine their categories, such as the amount due from related parties or employees, or review any credit balances in the receivable list, and review minutes of meeting or any supporting documents, and request for management representation letter for any activities related to accounts receivable. Assalamualaikum warahmatullahi taala wabarakatuh. So before we go to the conclusion, we'll discuss the past year question, June 2019, question 5. The first question required us to identify one internal control procedure to ensure that all sales transactions are correctly billed. So we look at book page 71. There are two, so we'll choose one only because the question asks for one. Goods shipped are independently counted and description and quantities on shipping documents are compared with sale order. The next questions require us to explain any two management assertions related to the sales transactions. So we look at the same page, workbook page 71. There are 5: occurrence, completeness, accuracy, cut-off, and classification. So we choose occurrence, which is all sales have recorded, and pertain to the entity. And the second one is accuracy, amount related to sales have been recorded appropriately. So the next questions required us to identify 5 major weaknesses in this internal control system. So I have underlined the first weakness, which is a pre-numbered cash bill is issued and delivered together with the goods to the customer. The second weakness is in the first paragraph. The accounts clerk is in charge of receiving the checks from credit customers, and he is responsible for preparing a list of all checks received on a daily basis. And then the third one is in the second paragraph. A soft copy of the approved purchase order is sent to the supplier by email. And then the account clerk, in the next paragraph, the third paragraph, the account clerk would then prepare a payment voucher and a check for submission to the accountant. And the last weakness is the accountant would ensure that the amount of the check matches with the amount on the payment voucher before signing on the check. So after we have identified the 5 major weaknesses in the above internal control subsystem, we will discuss about the possible effects and then a recommendation. Okay, so for the first weakness, which is no multi-copy of cash bill and sale invoice prepared. So it may be possible that there is a missing document and not be detected. So the recommendation, a multi-copy cash bill and sale invoice should be prepared. And the second weakness, there are no proper segregation duties whereby the accounts clerk has access to check and she is also in charge of updating the cash receipt journal. So there may be possible effects that the accounts clerk may misappropriate the checks or manipulate the records. So the suggestion is there should be a proper segregation duties between recording functions and physical custody checks. The next weakness is only soft copy of purchase order sent to supplier. So maybe information might be misleading due to email being deleted or delivery of wrong item. So the recommendation is a hard copy from purchase order should be sent to the supplier after the email. A confirmation email should be sent to the supplier after the email. The next weakness is supplier invoice was not verified against receiving GRN report from the warehouse before processing the payment. So it might be that supplier might be overpay if quantity received may be less than quantity ordered. So the particulars on supplier invoice should be properly verified and receiving report. And the last weakness is no proper approval on the payment voucher and no proper verification against supporting document prior to sign of the check. So the possible effect is errors made by account clerks might not be detected, or they may be over or under payment to suppliers. So the recommendation is there should be a proper approval on the payment voucher and proper verification against supporting document prior to signing of the check. That is all for the past year question. So we hope after this discussion, you guys can understand better in this topic. So the conclusion from this video is that sales and receivables are the main accounts that are included in the revenue cycle. Which is also mean the auditor should understand the business functions related to sales and credit sales. The auditor should also determine the assertions for sales and accounts receivables and their related audit objectives. Occurrence, completeness, accuracy, cut-off, and classification are the audit objectives for sales and receivables transactions. Existence, rights and obligations, completeness and valuation and allocation are the audit objectives for sales and account receivables balances. So for the auditors to achieve the objectives, first, the auditors should perform tests of controls to determine the control risk and the amount of substantive tests that should be performed. Tests of details of transactions and balances will be performed in stages, and the auditor should verify the reasonableness of the amount estimated for the bad debt.